Yeah, good day, viewers. Welcome to today's episode. Like I always do, I will also remind us that we need to, or rather, we should subscribe to my YouTube channel. All right, because these materials or information that I'm giving out is for free. And I feel this is the only way I can give back to the community, right? I paid heavily and learned this thing on my own. But I feel it's something that is kind of complicated. I took it upon myself to make it simple, or rather to simplify it. It's not as difficult as we always think, you know. I have the ability to simplify uh, Forex trading for you guys if you are interested. And I believe this is a kind of um, business or a skill set that anyone can, hop into because it's something you can join with even if you are still doing your normal day to day job, or you are a businessman, or you are a retiree. You can just, it's something that once you learn it, you can earn a passive income from in the comfort of your home without any stress. But the only stress there is acquiring the skill set, because it's not that easy. It's not something you just start today and start making money. So you should remove that from your mind. You need to learn it, master it, practice it then before you start seeing the result. So, without wasting much of our time, I will urge you guys to please subscribe to my YouTube channel, okay? And something came to my notice, there are some people, they're always scared to subscribe to a channel, It's a process. Once you want to subscribe, you just hit the subscribe button, all right? It will ask you to input your own password, all right? Your password, because once you click subscribe button, you see your email address. Then there will be a space that they will tell you put in your password. Because at that point, what YouTube is trying to do is to ask to verify if you are actually the owner of that your account. So by imputing the password, the password is not going anywhere. It's just a verification to be sure that you are the owner of that account. That's all. You don't need to be afraid anytime you want to subscribe to a YouTube channel. It's a process, and that is how it is, guys. So subscribe, hit the like button, share my videos, all right? So that I'll be encouraged to, always um, give out other information, all right? And for me to always make videos, all right? If you follow the series of this video, I tell you, you are on your way to become a professional trader. Without wasting time, today there's a topic I titled Other Blocks. People always use that word, other blocks, other blocks, other blocks, other blocks, and you wonder what do they mean by other block? Once you hear those words, you don't need to be scared, because in any field, in any discipline, there are always terminologies, all right? You should understand what I mean. So, in the world of Forex, there are terms, there are terminologies, there are words that are not common. So, that is why I'm taking it upon myself to break everything down for us to understand. So when you mean other blocks, so the topic of today, I titled it Other Blocks or people would call it, make it short, OBs. All right. Then I'll be giving us the meaning of other blocks. I'll let us know the meaning. Then how to identify other blocks on a chart. I will show us. Then the types of other blocks, because we have types of other blocks, and I will show us examples on how we can, denote it. By the time you see other blocks, okay, you say, okay, this is another block. I'll give us an example. So we'll start from the meaning. All right. What is other block? Other blocks are footprints left by the market or price action when an impulsive move occur. All right. I'm going to be showing us immediately so that we'll flow with this teaching. All right. For example, look at this is a move. All right. This is a move to this point. You can see it's just a bearish, 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 bearish. Those candles follows simultaneously. You see a bearish candle, only bearish candle up to this point. All right. So as we know that other blocks, they are footprints left by the market or a price action when an impulsive move occur. This is an impulsive move. All right. I will still show us another example. Here, this is an impulsive move. All right. To the upside, this point. It took off from here. It ended here before any retracement. All right. If you look at it here again, you see a move to this downside before a retracement. All right. Do you understand? This is what we call impulsive move. All right. In Forex market, it's two things. We have the impulsive move, then the corrective move. All right. The impulsive move, then the corrective move. All right. So another blocks, another blocks are footprints left by the market or price action when an impulsive move occur. These are the footprints, candle, candlestick, 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 candlestick. All right, if it's going up, we have candlestick, 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 candle, just like these are price action, and all these things denotes the process of price action movement. All right. And every candlestick here you see represent the story of what is happening in the forest market. So you need to still get yourself acquainted or know how to read candlestick. When you see a candlestick, you know what it means. All right. Like if I show you this one, now you see when it opens, it pulled up to all. It was bullish at some point, but sellers took took over and pushed the price completely down. All right, so that is the story of this one. Now it's a very simple thing. Then this one now you see this is a dodgy candle, meaning that there was a struggle between sellers and buyers. Buyers wanted to take, sellers wanted to take over, but buyers didn't let them. So they struggled and they closed. It was a draw game, so nobody won. But at the end of the day, it closed bearish. All right, it closed bearish. But when the next bar market opened, buyers took over. They overpowered sellers. That is why you see the price continues up. All right. So I hope that is very clear the meaning of order block. Their footprints left by the market, they leave footprint as they progress. Okay, it's a footprint left by the market when an impulsive move occur. When a move occur, there is always a footprint that they will leave behind. All right, it's very very clear and simple. Then, how do you identify? Um, how do you identify an order block? Okay, order block can be identified by looking for areas where the price experience a sudden change in direction or momentum. All right, a sudden change. All right, the price, for example, this very one here, this very one here, you can see price was bullish up to this point. All of a sudden, there was a change in direction. It went that completely down there like this. All right, it was bullish, but the trend now changed completely and it came down. All right, there was a decline in price. The price was rising, but at some point it changes and there was a decline. There was fall in price. All right, it's a very simple thing to really understand. All right, we don't need to crack our heads over it. If you see, when all right, so you identify them by looking for areas where the price experience a sudden change in direction or a momentum. All right, it's very clear. I've just showed us. Then another thing is the types of order blocks. All right, we have a bullish order blocks, then a bearish order block. All right, we have bullish order block, then a bearish order block. Now, a bullish order block is usually at what a demand zone. This is typically the last bearish candle before a significant up move. All right. Now, this is this very one here. You see a bearish move, then you see a bullish move up to this side, right? Now, this is typically the last bearish candle before a significant move. So, if I ask us now, it's very simple. You see this candle down here is what we refer to as a bullish order block. All right, this is a bullish order block. Anyway, this bearish candle here is a bullish order block. As simple as that. This is a bullish order block. All right, it's usually it's typically the last bearish candle before a significant uptrend. This is the last bearish candle before an uptrend took over. All right. Then we have another one we call bearish order block. All right. It usually found at what? A supply zone. We should understand what supply zone means at this point. Supply zone is at the top. Demand zone is below. All right. So a bearish order block is usually the last bullish candle before a significant downtrend. A last bullish candle. This is a last bullish candle. All right. Last bullish candle before a significant bearish trend. So this candlestick here, this price action here is what we refer to as what? Bearish, all right? Bearish order block. This thing I'm giving you guys here, it's you cannot get this kind of explanation anywhere. They will just teach you and just be rushing. Before you know it, you get confused, you will not understand. I'm just showing you as I teach. So it's very simple. Bearish underblock is the last bullish candle before a bearish trend occur. While the bullish order block is the last bearish candle before a bullish trend occur. As simple as that. Let it enter your head and it just sink. When you open your chart anytime, can always identify it. Because all these points, price action will come and react to it anytime. All right, that is why it's very important. Okay, no matter how small this move from here to this place, this guy is what? A bullish order block. All right. This guy here is what? A bearish order block. This is a bearish order block because it's the last bullish candle before a bearish move. This is the last bearish candle before this bullish move. It's a very simple. They're everywhere. So as this price action is coming down here, it will always react here. So let's assume you entered here. Be rest assured that once price get to this point, it will react. So it's always safe for you to when you enter here, take your take profit should be here. So that you won't start struggling and be praying to God, oh, let price go like this, let's go. No. Enter here, take your profit, and wait for another setup. That is all. As simple as that. And if once it gets here, there will be a reaction. And once you see that the price action is ready to continue going downward, as it gives you candlestick formation, you enter again. Your next TP should be here. Your next TP should be here. As simple as that. Don't be greedy. It's simple, guys. Very, very simple. Very, very simple. Then an example is that when you see a red candle followed by a series of green candles, all right? You see a red candle, all right? You see a red candle followed by a series of green candle, or you anyhow you can modify your own candle, the color. You see a red candle, then followed by a series of white candle. In this case, now what does that mean? Once you see a bearish candle, then followed by a bullish candle, a series of bullish candle. The red candle is the bearish order block. This is it. As simple as that. I've already told us. Then the next example is that if you see a green candle, all right, what I mean in this case now, this is a bullish candle, all right, followed by a series of red candles. The green candle is the bearish underblock. All right, it's as simple as that. This is a bullish candle. The next bearish candles, we see series of bearish candles follow suit. So this guy here is what we call bearish underblock. So guys, test this thing and you'll see that you will not have to struggle again. Thank you so much. Subscribe to my channel until I see you again. God bless you.